Good afternoon and welcome to Biztech's Asian Midday Market Watch. It's the 19th of December and we have my co-host today, Jeffery Halley, with me. And our guest today is Glenn Yin, Head of Research and Analysis at AETOS Capital Group out of Australia. Now, Glenn, great to have you on the show, and Jeff as well.
Yeah, wonderful to be here.
Thank you for having me.
Now, before we get your insights, Glenn, we're going to take a look and see how markets across the region have performed. We start with Malaysia, where I'm at. The KLCI is down 0.01%. Shanghai is unchanged. The ASX All Ordinaries is in the green. It's up 0.85%. The Nikkei is up 1.03%. The Hang Seng is down 0.72%. And rounding up the numbers, we've got the Kospi, which is down 0.05%.
And Glenn, we've also had a Bank of Japan rate decision today, unchanged yet again, and also the RBA minutes. So in the context of all of that, what's your view on the Asian markets' performances today?
Yes, Jeff. So certainly we had the BOJ decision, which is the last central bank action for 2023. So no hike today. Yen actually crashed so hard it even boosted the dollar index past the 61.8 Fibonacci retracement / resistance level. Again, there's no surprise that the BOJ did not exit from negative rates today, and as we discussed before, the exit requires both inflation and the wage increase, or the so-called wage price spiral, and I think that is more likely to happen in spring or April 2024, just after the spring wage negotiation, Jeff.
Now, right, and sorry, go ahead, Brian.
Go ahead, Jeff. You want to ask a question?
No, I was actually going to ask, so what was your outlook for when the Bank of Japan will they actually get round to starting to unwind this negative interest rate policy?
So look, there's certainly lots of optimism packed into the price actions, as we can see today. The yen crashing, that's just the bulls taking casualties, taking heavy fire, basically stepping on the mines themselves, and I think that's just too much optimism. Our base case scenario is like I said, April pivots, stepping out of the negative rates, but the actual implementation may actually take place in May.
Now, I want to swing a little bit around to what investors are looking around right now, and it's really around crude oil prices. Obviously, there's been Red Sea attacks becoming more frequent in the last couple of weeks, but prices are rebounding from their 5-month lows. What's your take on the oil market, Glenn?
Yes, Brian. I think it's always interesting that when we jump on the show, something significant happens. Last week we talked about the crude oil hitting the 5-month low, and today it's rebounding. And the reason is a dramatic one, like you said. The Red Sea, we're seeing the increasing instability there, and the militants attacking multiple commercial vessels traveling through the region, with one being hijacked. I think last time we saw something like this was in the early 2000s when the Somali pirates attacked hundreds of vessels. But today the situation is escalating rapidly as well. 4 of the world's 5 biggest container shipping companies have suspended operations through the areas, a route through which traffic from the Suez Canal must pass, and more than 12% of the world's global trade go through. The 4 container shipping companies account for nearly half of global container trade. So the suspension of operations carry a significant weight. If markets perceive the blockage to threaten shipping through the nearby Arabian Sea, which again accounts for 1/3 of global seaborne oil, then oil prices may jump and stay a bit higher throughout the year or even into 2024. So in short, this development, in my opinion, is certainly drawing global attention, but essentially it's a potential threat to the supply side. We're not yet talking about scales of oil embargoes in the 70s or the 80s, but it's something every commodity trader should definitely put on their radar.
And we are seeing some haven trades going on. If we look at the price of gold, for example, it's been quite resilient above $2,000 an ounce. And I guess if you were to look at cryptos as well, we've seen a pretty strong performance in that space as well. What do you feel the potential is, though, for this problem around Yemen and in the Red Sea to potentially spill out into a wider regional conflict? Because we know that geopolitics will play a big part of 2024.
Great question, Jeff. I think the gold, like you said, has remained very resilient above the $2,000 per ounce stronghold. I'm looking at the $2,033 per ounce support level at the moment. This level has proven to be valid, a long-term support going back to May this year when gold hit the first all-time high. But on the fundamental side, the most worrying factor, I think, comes from the fears on the ongoing conflicts expanding into the regional conflict. Particularly, Egypt is already in a financial crisis. If we look at the map of the Red Sea, we see the Red Sea in the middle. You have Saudi Arabia on the east, Egypt sort of on the northwest, and immediately we'll see the Suez Canal. So essentially, the Red Sea connects the Suez Canal to the Arabian Sea, but the militants in Yemen blocks that passage. It is effectively hurting Egypt's major source of income through the canal, and this may add significant burden to Egypt's already troubled economy. Whenever there's renewed fear, like you said, investors are looking into haven trades such as gold.
Okay, on a different note, just as both of you were talking, one of the key things that then came to mind was really the worry around inflation. So you've got a spike in oil prices, you've got to have spikes in shipping rates. But you obviously this is all going to feed into inflation. Is that something that as investors we should be looking out for?
Definitely, Brian, definitely. So this is probably my favorite as well. We saw the US benchmarks hitting new records, Treasury yields sliding down, the greenback retreating, but we should all bear in mind that this is a result of highly optimistic pricing, and on that basis, inflation is out of the game. So things can change quite rapidly if oil prices rebound and persist. So inflation and markets may be forced to reevaluate their pricing on equities, fixed incomes, currencies, and basically everything.
Very much a momentum trade across markets at the moment, isn't it?
Exactly, Jeff.
Now, Glenn, thank you very much for your insights, and thanks for coming on the show.
Thank you very much for having me, guys.
Now, this has been Biztech's Asian Midday Market Watch. I'm Brian Fernandez.
And I'm Jeffery Halley.
And this video and podcast will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.